Welcome back to Beyond the Build, powered by Red Team, the podcast where we go beyond the job site to explore the people, processes, and technology driving construction forward. Let's get started.
I'm Michael Wright. I am the Chief Strategy Officer of Red Team. I was also the original founder, but probably more important for our audience is the fact that I'm a commercial general contractor. And so I've been in the commercial construction business for nearly 30 years. I've got getting close to about $2 billion of work in place. So my commercial construction business is a mid-sized contractor. We are not on the ENR 400, but we're pretty close. And of course, so that I think is probably the most relevant thing you can know about me. Other than I'll add, prior to getting into commercial construction, I did work in accounting and finance, including KPMG. So from the very beginning of my career in construction, I had a very specific focus and appreciation for the accounting. So I'm somewhat of a hybrid. And so I do love the construction accounting, and I do love the construction. So with that, I think we'll get into it. So current state of construction accounting and project management. I know that's a very big title, and we'll do our best to kind of focus on some of the things that are really most relevant to our audience today. There are obviously a fair amount of financial risks for construction contractors. Sometimes those are external risks, and I think lately, there's a lot of angst about just economic conditions, and we'll actually touch on some of those things as we go through the details. So this is a top five. This is my list of top five. It's not so dramatic because we're revealing all five all at once, but I'm going to go ahead and start at the bottom of the list, and we'll talk about each one of these. So number five, consistent project management practices. Now you may be wondering, how's that relevant to construction accounting and integration between operations and finance? And I'll tell you, it's actually critical. One of the areas, so for me as a contractor, one of the areas where I've gotten pushback from my clients is when I change personnel on a project team. So if I change a project manager or assign somebody new to a project, it's not uncommon for an owner to push back and say, listen, I'm really frustrated. I had conversations with Jane, or I had an agreement with Bill about doing X, Y, or Z. These are very common issues that come up when personnel changes occur. And your best response to something like that is say, listen, we have a very comprehensive project management system, and all our project managers do things the same way. And I appreciate the fact that you had conversations with the former project team members, but anything and everything that you shared with them is in our system. I can assure you of that. And so the more consistent you are about managing your project and ensuring that your workflows are the same across the entire enterprise, it gives you a great way to respond to any concern from a project owner about maybe conversations that they had with prior personnel. So I can't emphasize enough how important this is to really building and scaling your construction organization. So that was number five. So number four, accurate financial reporting. Of course, that's near and dear to everyone's heart, but it's easy to say, and it's actually quite challenging to do. And one of the key benefits of having integrated systems is it saves you a lot of time in producing financial statements. Financial statements for a commercial construction company are critically dependent on things like latest revised estimated cost at complete on your projects, understanding exactly what the contract status is with your clients, understanding the value of all of your commitments on the project. And this is not just what's been signed and executed, but this includes construction change directives along the way. And so at any point in time on really every project, every commercial construction project, you've got open CCDs with clients, and you're in the process of either performing the work or proposing adjustments to the contract price and time as a result of those changes on the project. And so being able to manage all that information seamlessly between operations and accounting is critical to having accurate financial reporting. In today's operating environment, that's more important than ever, because your key financial partners in the industry rely on these financial statements. Who are your key financial partners? Well, number one, it's your bank. Number two, it's your surety, and I'd almost split that in two. I'd say your surety and your surety agent. They're almost two different entities, and you've got to manage your relationship with both of those. And then third, you've got your insurance company. And so at some point in time, you're sharing financial information with these key financial partners. And the more volatility we see out in the market, the more external threats there are to you and your business and your projects, the more important it is to make sure that your key financial partners have accurate financial statements from your team. Number three, contractual and statutory compliance. We all focus as general contractors, we all focus on contracts, clearly contracts between us and our clients, upstream in the supply chain. But also we have to manage the contracts we have with all of our subcontractors and suppliers. It's critical. Going back to number five, making sure we do this the same on every project is really important. With regard to number three, compliance with contract keeps you in a good position to manage and control risk. You never want to be in a situation where there's a problem somewhere in your supply chain where your team is actually out of compliance with your own contracts, because it reduces your optionality in solving disputes and issues as they arise. The second half of this bullet, number three, is statutory compliance. As general contractors, we don't often think too much about statutory compliance, but in an environment where there's a lot of volatility with our clients, you want to make sure that not only are you compliant with your contract, but you've done everything you need to do to protect yourself from a statutory standpoint. And what I'm speaking of is the mechanics lien law. And an example of this would be for those of you on the call like me who utilize AIA contracts. I actually like AIA contracts, but AIA contracts do not have an attorney's fee provision. And so even if you sign that contract without an attorney's fee provision, by paying close attention to your statutory rights, you could file a lien claim, which would give you, in most states, I understand, all except Texas, I think, but don't hold me to that because I'm not reading the statute. But the filing a lien claim actually gives you entitlement to recover attorney's fees in the event that you end up having a dispute upstream in your relationship. So that was number three. So number two, supply chain volatility. This is the thing that all of us, I think, are suffering through on the news each night these days. And so this volatility is something that affects upstream and downstream. So these things are impacting owners, it's impacting our subcontractors, and we need to be as construction professionals, either on the operations side and the accounting side, we need to be super focused on what externalities are impacting the supply chain both up and down. One of the things that I specifically I'm very aware of in times like this is the money that my clients have set aside to pay for work. And going back to AIA contracts, there are provisions in prime contracts that give us the ability to verify and validate that funds are available to pay for the work. And that's something we need to be doing. And that's a responsibility that really spans the enterprise. And so we need to be focused on making sure that our clients have funds available to pay for the work. And that if any point there are constraints or issues associated with those funds, we need to be very diligent about making sure that we're fully compliant contractually and statutorily, so that we have remedies that can protect the business in the event that there is some kind of interruption of cash flow for our clients, something we need to be very aware of. And number one, and this one is timeless, we need to control cash flow. And whose job is that? That's actually everyone's job. Everyone in the company is responsible for managing cash flow. And a lot of this gets handled automatically by being sure that we're compliant with our contract, being compliant with all our notices on the statutory side, but really understanding what cash flow is critical for the organization. For people that work for traditional businesses, non-construction service businesses, that means managing working capital. Working capital management for construction companies is a little bit different. For a traditional service business, working capital is accounts payable minus accounts receivable. So why is accounts payable a positive number in terms of measuring working capital? Well, it's positive because the dollars in accounts payable belong to somebody else, but they're still in your bank account, which makes that a source of working capital for your business. On the other hand, dollars in accounts receivable is your money that is in someone else's bank account. And so the way we typically measure working capital for a service business is we take accounts payable and we subtract accounts receivable, and that number could be positive or negative. If it's positive, then you're in a net cash surplus position. If it's negative, you're in a cash deficit position. Now, I said commercial construction is a little bit different. What makes commercial construction different is that we have, at any point in time, we have something called over and under billings. And over and under billings is calculated on our WIP schedules, and it's dependent upon our revenue recognition. And so in order to understand our true cash position for a commercial construction project, we have to adjust accounts receivable for over under billing.
If we're looking for integrated software, first thing, non-optional is a WIP you can filter by date or by accounting period. If you're on QuickBooks, you want to filter by date. If you're on Sage, you want to filter by accounting period. It is not optional. If the software doesn't include that, I feel like it's, you're going to be back to the spreadsheet, but you're going to be working on last month's data. The next thing is two-way real-time integration between project management and accounting. So, for example, in Red Team, the vendor invoices are entered there. They're routed for approval, and they make it over to QuickBooks or Sage, whatever accounting software you're using. So you eliminate the manual entry. And then the payments, of course, and the cash management's handled in your ERP or your accounting system. That should go back to project management. Project managers would call us and ask us for job cost reports, ask us what we paid the electrical sub. That should not happen anymore. It's right on their homepage. It's right on their buyout tab. They should be able to look at an audit of a subcontract and get all of that information. The other thing is software that handles not only accounts payable, subcontractors and suppliers, but expenses and timesheets that will allocate labor rates to the project. And you should be able to decide what those labor rates include. Do they include that overhead and administrative costs that I mentioned earlier? That you should be able to do that without having another spreadsheet and without having to do a bunch of adjusting entries to get there. I would also look for an app that facilitates vendor billing against a schedule of values. I can't tell you how much time is wasted if you don't utilize that tool of emails going back and forth, the electrician bills for an unexecuted change order, or the plumber doesn't use a schedule of values that matches yours. That's a huge time saver if you control the schedule of values with the subcontract and they bill against it.
That's actually a great point. And that one of the challenges for project teams is when costs get recorded differently than the way they were budgeted. And so by
Yes.
connecting the commitment schedule values to the system and the invoice disbursement authorization process, you eliminate that scattershot impact to your job cost reports. And that, so asking your project team members to quote unquote code invoices when they come in the door is a huge, huge mistake. Consumes a lot of time, and it makes the job cost reports much more difficult to manage. And inevitably, project teams will go back to accounting and say, hey, can you relocate or move these costs because we inadvertently coded them to the wrong place? The budget belongs in a different cost code. And so if you can really short circuit that whole process in an integrated system by making sure that these workflows are connected. The other thing I'll say about software is not all accounting integrations are the same. And so it's definitely, I think when people are shopping for software, they may say, hey, I want to know if you're integrated with QuickBooks Online. And it comes off as a yes or no question, but I'll tell you, the integration itself is in and of itself a product. And so what we've built is what we describe as an event-driven integration, meaning there's no manual intervention in the process to send or receive or download. What you want is an event-driven system so that the workflows become completely seamless between the project team members. So they shouldn't have to know whether a transaction has been sent to accounting or brought back from accounting. It should all be completely invisible and all be updated in real time. So to me, that's a really important thing to consider when evaluating a solution. The other thing is during the demo process, and I know this is difficult, but show me, ask to see it. Because if you don't see it, you don't really know what you're buying. And so I think seeing it is a really important part of the evaluation process. And the last thing I would say about this is higher price doesn't mean better in what we do. And we as contractors, we've regularly see 100% or more bid spreads when bidding out work. And really the same is true when evaluating solutions for construction, accounting, and project management. So a higher price doesn't necessarily mean a better solution. Well, the best solution is one that you look at, you can see it, you can try it, and it works for your team.
Excellent. I'll add 2 more bullet points, if you don't mind, as far as how to, a couple of things to consider when selecting an integrated solution. I think customizable commitment forms, the ability to add those price clause escalations, or just the whole idea that if you have a specific client that requires a specific contract, the ability to customize your commitment forms, including replacement fields and a text editor, are key. And it's hard to find. But in today's environment, when risk is so high, I think it's critical. And then, of course, we also want to make sure there's online training resources, new feature notifications, and a very efficient chat support for any software application you're looking at.
Well, we only have 3 bullets on the slide, but I think we went through a lot more things to consider.
We did.
And we don't underappreciate the challenge in selecting the right solution. I would just say, chemistry is important. If you talk to somebody at Red Team or somebody from another vendor, making sure that they really understand your business is really important. So what do you think are the key features contractors should look for when evaluating integrated construction management? Yeah, did we miss anything?
I'm all into WIP, 2-way real-time integration, event-driven, as you say, no pushing. One thing I would also look for is the entity list. In QuickBooks, we call them lists. In Sage, you call them vendors and customers. the ability of a software package that if you put in a commitment to a new vendor that doesn't exist, that the software will actually create it. There is no stopping, creating it on both sides, mapping one to another. That leads to duplicate vendors. It leads to all kinds of things. That was just one thing that I deal with, pretty much on a weekly basis that I wanted to mention.
Yeah, yeah. This next question I think is right up your alley. What's the biggest challenge contractors face when adopting new software, and how can they overcome it?
I think the number one solution that I actually learned from you was that the implementation and the adoption of new technology has to come from the top down. If the president of the company, if the operations manager, if the CFO, if they are not on board 100% in promoting and educating and respecting that change is difficult, change is very difficult for everybody. But if you start with, if the top enforces it, endorses it, and sufficiently trains, it makes a world of difference. I think that is the biggest factor in adopting any major change in a company, but especially in software.
I couldn't agree more. The reality is when you move on to an integrated platform, inevitably it impacts people's workflows. And so it's really critical that the entire team understands the key business objectives being accomplished by bringing on a platform solution. Because if you don't, they may not understand the handoff points between workflows. And so if they resist those handoff points, and the handoff points may be different from what they did when everything was manual. And so everybody's job essentially gets impacted during the implementation process. So it's critical that we have good alignment from the top to the bottom, and everyone is on the same page in terms of commitment to getting the platform up and running.
Exactly. And I would say that you don't want to rush this. You want to plan it. You want to have milestones, just as you would a construction project. When you're integrating project management with your accounting software, you have to understand that things that are happening on the project management side are touching your trial balance and your financial statements. So this is a big adjustment. And this requires really good permissions on the project management side. The roles and permissions are absolutely critical as to what comes over to accounting.
Yeah, that is actually a huge issue. And so some people don't realize it until they actually get started on the platform. And then, and Annette, you and I have been shocked by this more than once. We've had teams say, well, we want accounting to do what they want to do, and we want ops to do what operations wants to do, and we don't really care if they talk or get along at all, right? Because we've struggled with the two teams, competing with each other, and so we just want to give both teams separately what they want. And I can tell you that does not work.
It does not.
And I've seen people try and do it, and it just simply does not work. We have to be able to trust each other, and it goes back to the organizational commitment and organizational alignment. The system won't work unless everybody's on board and on the same page.
Couldn't agree more. Thank you. As far as the implementation goes, Michael, though, I would recommend anyone that is going to move from a disparate system where you've got project management that doesn't talk to accounting, that you engage a consultant to manage that implementation and integration. Don't just plug it in and start using it, because like I said, it's going to hit your trial balance. And it does require a sufficient amount of planning, at a project level. Which projects are almost complete? Are we not going to implement them on the project management side? Which ones are in progress, which means we need to know what's billed to date, what our job cost to date. So there's an accounting piece to this that can be easily overlooked if you just plug it in and start using it. And then
Yeah, and I've actually sent you a fair amount of business over the
Yes,
years
you have. Thank you.
for clients that I've come across that want to have a mid-year transition,
Mhm.
and they want to have a transition to move some projects onto a new platform, keeping existing projects on an old platform, and keeping all that organized is no small feat. And it requires somebody like you, Annette, that really understands the accounting, understands the operations, and is able to help people through that transition process.
And it requires patience, and sometimes it requires cleaning up the existing books. There's some work involved there. I don't actually do the conversions at this point in my career, but I certainly manage them. So there's a lot of thought that needs to go into this. So while the project management team is developing their new cost code list, implementing change order procedures, customizing their commitment documents, there's a lot going on there. At the same time, accounting in parallel should be cleaning up their AP, cleaning up their AR, as a team deciding which jobs we're going to implement in our new integrated software, so that at the end of the year, you don't have a problem with financial statements that you need to present to your tax professional, your surety, or your bank. There's a lot of balance sheet considerations here. But it can be done if you take it piece by piece and you plan it, and everybody's on team and understands the advantages of doing it. And a lot of times people say, why are we doing this? Because it's a bit of work. It can be. If you're in between jobs, it's a lot less work, But the advice I give a company that's hesitant to do this is to look at the cost of not doing it. Look at the cost of not having a WIP, of knowing what your true percentage of completion is real time when you never know what's going to happen to your prices next month. It's a big picture, Mike. It's all the things that you've talked about today, the risk, the compliance. I think the cost of not integrating the two sides of the house, if you will, are much higher than the cost of the implementation and the new software.
Totally agree. I think that's great advice. Well, I think we're actually about at our time at this point. No doubt, commercial construction is a very, very challenging business. But I can tell you, and this seems universal, particularly after working with hundreds of contractors, the reason we do it is we love it. And I think as difficult as it can be, we stay in the industry because we love the business of construction. So with that, I think we can wrap our webinar today, Annette.
Thank you, Michael. Thank you for inviting me.
Thanks again for listening to Beyond the Build, powered by Red Team. Before we wrap, if you'd like to connect with today's guests, you can find Michael Wright and Annette Bain on LinkedIn, linked in the show notes. And if you're exploring ways to bring more efficiency, alignment, and growth into your business, we'd love to connect with you as well. You can learn more about how Red Team supports contractors through solutions like Red Team Go and Red Team Flex by booking time with our team. Finally, a big thank you to Michael and Annette for sharing their time, insights, and real-world experience. Conversations like this are what help move the industry forward. Be sure to subscribe on Apple Podcasts, Spotify, YouTube, or wherever you get your podcasts for more episodes, and we'll see you next time on Beyond the Build.